Hey everyone, Nio reported fiscal year 2023 first quarter earnings results. So in this video, I'm going to provide an analysis of those earnings results. I'm also going to update my recommendation on Nio stock. Before the numbers came out, I had Nio stock recommended as a hold, not a buy, and so I will be updating that recommendation in this video, letting you know if it has changed or if it's staying the same. You're not going to want to miss that, so stay tuned and let's get right into it. So total revenue increased by 7% to 1.55 billion. The net loss improved by 166% to 690 million. And I like to see this from companies. When revenue increases, it's improving the losses on the bottom line. This is very common for car companies, especially because all that upfront investment in building out the necessary infrastructure to build cars gets worked down, gets spread out when you start to produce more cars. So that's good to see. Vehicle deliveries of 31,000 was an increase from 25,800 in the same quarter last year, but it was a decrease from 40,000 in the previous quarter. Vehicle margin fell to 5.1% in Q1 compared to 18.1% in the first quarter of last year. Nio's management saying that people were opting for the lower priced models, lower cost models, and that was a headwind for the company in the first quarter this year. Unfortunately, things seem to be getting worse for Nio. Nio delivered only 6,658 cars in April, and that was even lower to 6,155 cars in May. So if you look at the past few months, Nio's deliveries has been going downward. And part of the reason is that China this same time last year had more incentives to purchase EVs. Those incentives have decreased significantly, and so that's making harder on consumers when they're looking to purchase these cars. The total overall cost appears higher than it was in the same quarter last year. On May 24th, Nio launched the all-new ESP, an electric SUV, and started deliveries on the next day. But if you look at Nio's forecast for the second quarter of 24,000 cars at the midpoint, that would be a decrease of 4% year over year, which tells me that the initial demand for these newer cars are not that high. The newer SUV is not that high, unless the demand for the new SUV is high, but it's cannibalizing demand from its other vehicles, and those other vehicle sales are falling much faster. So not looking good for Nio right now. Lots of headwinds. Competition is rising. Supply of electric vehicles are exploding, right? Nearly every car company, legacy or new, is ramping up production of electric vehicles, and that's putting pressure on each and individual company that's trying to sell electric vehicles right now. So to update my recommendation, I had Nio stock as a hold coming into this result report. I'm going to keep that recommendation there. I don't think Nio improved in this quarter compared to the previous quarter. If anything, I think my outlook has diminished a little bit. My enthusiasm has diminished a little bit on the stock, given its struggle to deliver cars and on an increasing rate in 2023. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.